Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but today let's give you some guesses, why we are calling a company here. And for today KYC, let's guess the company. The first one is it's a recently listed pharma company. Half of this guesswork I already have given it to you. This has been subscribed 94 times during the IPO. Yes, investors have also participated. But the company has come with a weak Q2 numbers. Just after listing, company comes with a weaker set of numbers. And of course, the market will treat it on the other way and there will be some punishment. The company I'm talking about is Sudeep Pharma. That's the focus. And there are some questions I need to ask. The first is, what led to a weaker Q2 just after its IPO? Second question is, there's a margin pressure coming when I'm analyzing their numbers. Will this margin pressure continue in the third quarter itself? That's another concern. The third question I'll be asking is, working capital issues are still there. Will this continue going ahead? Because once this happens, this continues for at least 6 months to almost 9 months in this industry like the company which is operating. And will the return ratios remain under pressure because company is going through expansions and also some restructuring, and that is where my concern comes on the balance sheet. Also, what is the market potential for supplements? This is a very sunrise sector and we are seeing all across the market nutraceutical players all flocking this segment. So what's in it for the company and how different it is as if you position this company with another pharma company? So these are the questions we'll be asking for Sudeep Pharma, but I want to make you understand something about this company. This company is a bit different. It's just not a regular pharma company. And I would like to point out, this was recently listed and there is a moat in this kind of business. To be fair, the company manufactures pharma excipients or food grade minerals. Now this excipients is nothing but, let's just say, the best supporting role when it comes to a medicine. And what happens because of this is they help in giving a binding agent, they become a flavoring agent, and where the real action is supposed to happen for this table, for these tablets or medicines, that's what the excipients do. So they are very, very much important in the entire ecosystem. Over here, specialty nutritional ingredients are also there as we move towards the lifestyle side, and that is where Sudeep Pharma comes in. Now the IPO euphoria, that has come down on a weaker Q2 earnings. That's what the street is looking like. Last two trading sessions, there were under selling pressure post the earnings. IPO subscribed 94 times. That is what everybody was talking about. But if the numbers don't come, the markets do punish you. And of course, we're looking at the large, listing gain. That was the pop. That was 24% for this company. And there were some important investors. Mukul Agarwal, Prashant Jain, related promoter, NDTV also participated. But now let's go back to the segments, the core business. Where's the action? Specialty ingredient, that's around 67 odd percent. Remaining the pharmaceutical, the food, that's around 34 odd percent. So that's the revenue breakup I'm getting via the business. Geographical distribution is largely, there's around 58% for Indian markets. Exports, if you look at it, that is also coming in roughly on the higher side. But this is the detailed breakup coming in. It's still, there is no major, you could say, concentration happening. The distribution is slowly planning out. There are 3 plants in Baroda, Vadodara, 1 facility in Ireland, which was acquired in FY25. That is what we'll be looking out for. The total installed capacity currently stands at 72,246 million tons per annum going ahead. And also they're setting up a new expansion plan in Gujarat, and that is why the pressure is coming. The IPO is also done to actually take some proceeds for this expansion. And that's why we might see the pressure in the financials for the company because they have taken a big hit. Now expected to be operational by Q4 itself. So we will be asking the management what is the status about this important expansion, and because of that the street will be looking forward to the commentary as well. But now let's focus on how our KYC show comes up, and we give you generally 8 categories which has to be focused in. And lastly, I'd like to point out the financials, the income statement, the balance sheet, the cash flows, and even the return ratios. These are the 4 parameters where I'll judge the company, and the remaining 4 parameters, they include shareholding, street cred, valuation, outlook, and then we'll come with a combined KYC rating for Sudeep Pharma as well. Let's start with income statement where the action is there. Of course, recently we have studied the IPO because the last numbers which you can see, they have been decent. Revenue has grown up almost 14%, but EBITDA, that is something which has brought my eyes into this interest. That's around 38% growth coming in. Margins very decent, for a pharma player, getting a 39 to 40 odd percent and sustaining, that's something which is commendable. But net profit, that has also done well. And the Q2 numbers, that has become sore for everyone, and because of that there is some pressure in the stock as well. Revenue, nothing much happening, just 15% year-on-year basis growth coming in. And if we could just show the numbers again, how it's actually panning out for the Q2, the concern is here. The margins, the net profit, that is where the important market was looking, to look at the good numbers. But just after IPO, a weak set of numbers coming in. Now let's pull up the margins, what happens. And largely the margin trajectory was 40 to 39%, and we thought this would be sustaining, but then again it's back to 31, and that's where the question arises. What's the actual sustainable margins going forward? Will there be more pressure as companies going for expansion as well? So two sides of the coin, and I will be giving a neutral rating when it comes to the income statement. The second one is balance sheet. That's also very much important in post IPO. Of course, we have seen the numbers shore up, going on the higher side, the equity base going up, the book value going up, but the borrowings, that has slightly gone up by almost 6 odd crore rupees. So we thought that there would be some debt reduction, but this has not been used. This has been used for expansion when I am talking about the IPO proceeds. Also note the cash bank balances, that has showed up properly, and that's roughly gone up from 37 to 68 crore rupees. So it's decent, but it's not something which is very great. On that basis, I will give the balance sheet parameter a neutral rating. So income statement, balance sheet, both of them are done. But let's look at cash flows. It's one of the most important things to judge a company. If a company claims it is having a strong moat, if a company claims it has a strong margin, if a company claims that its products are very strong compared to its peers, let's see what the cash flows suggest then. Operating cash flows, that has gone down, and that has started for me to research more into the company, and the concerns start coming in here. Also, let the PAT numbers, that has also actually gone down, it's down almost 78 odd crore rupees. Let's come down and just show you the cash flow to PAT conversion. That has been going down from FY24, FY25, and now in September as well, and my concerns are starting to come. The net cash flows, that has also been erratic, and just 11 crore coming in the month of September. So we'll be asking company the questions on the working capital, and will it actually improve, or will the pain be there for the next 6 months or 9 months or even 12 months? Because these industries, the working capital issues are definitely there, and they have a higher time period for that. And because of that, I will give a thumbs down when it comes to the cash flow segment for Sudeep Pharma. Also, let's look at the return ratios. I had already mentioned to you that the return ratios would be in a big problem, and why this is? Because company is doing expansion, and this is of course a greenfield expansion coming in, and the nutraceutical business, there are some restructurings happening as well. Company mentioned it honestly in the Q2 numbers as well, but the market sees how the growth is there, and the sustenance of 30 of these numbers actually might be coming down as well for the next 6 months or 1 year. So ROC numbers still decent, but I would be giving because of its history, I would be giving this a thumbs down. So we spoke about 4 rating parameters to you, and right now the financials, they were evenly poised, but there's some concerns came in cash flows and the return ratios. But let's look at the other aspect also, and this is the shareholding aspect. If you're seeing just only one data set is there because it was recently listed, so I'll be giving a benefit of doubt to the company. But let's look at how the numbers pan out. Promoters are having 76% stake, so likely in the next 3 years there'll be a minor stake sale for SEBI norms to be fulfilled. FIs, not much, but DIs have come in properly, 15%, almost double of what the stake was there in the public shareholding. So net initial levels, it is looking neutral to me. With time, we'll judge the company more, and more progression will come in both institutional and public participation, and let's see how things move. But as of now, where the things stand, I will be giving a neutral rating when it comes to the shareholding pattern. Street cred, very small history, a very strong listing pop, but after that there wasn't much happening. From the listing price, stock is down 19%. From the IPO price also, we see there has been a good downtick of more than 10%, and post the earnings in the last 2 trading sessions, the stock has seen selling pressure. So that is where the issues start happening, and for that If you remove the IPO euphoria, now slowly the company, the fundamentals and the pricings have started to match. Look to go down also from here onwards. So right now, I'll give a thumbs down when it comes to street cred for Sudeep Pharma. But we spoke about the stock movement and the shareholding, but let's also talk about how the valuations pan out. The company claims that in their RHP, there isn't much any peer as such. I did a little bit of research. Sigaji Industries does have some kind of similarity. It's trading at a trailing 12 month of 54 times even after the IPO correction. That means there might have been a mispricing from the merchant bankers, or maybe the valuations were high. That this is what the street has been buzzing. But just to keep things in fairness for my show in KYC, I have got Nifty Pharma Index that is at 33 times trailing month 12p. Even in this, I will still give a benefit of doubt to the company and a neutral rating coming ahead in the valuations front. So of course we need to give in more time as well. So 7 ratings are done. Let's go to the 8th rating. That's the outlook. Specialty ingredients, they are manufacturing, and that is where the street is very bullish on. These are high margin products and we need to give time, especially for a long-term investor, 2 year, 3 year, 4 year, to actually see the benefits coming in. And if you had an IPO listing pop gain, congratulations to you. Now the upcoming greenfield expansion, everybody will be looking at this, especially the timelines and when the incremental benefits start coming in. Mineral chemistry expertise for battery material, that's what the management has been bullish on as well. But the question is, when are the R&D numbers going to come? When the client announcement will start coming in? That's what the street will be waiting for. Nutrition supplements is a large theme in the making. So of course, that is something which you'll be watching out for. So overall, looking at this outlook, I will be giving this a kind of a thumbs up going ahead. But let's just revise all the ratings, how the ratings have panned out for Sudeep Pharma. Recently listed company, 94 times subscription, but weak Q2 numbers. Income statement, balance sheet, it has been largely neutral, but cash flows and return ratio, that's where my concerns come in, and that's why I've given a thumbs down to it. Let's show the other parameters as well. Shareholding, valuation, it's neutral. Street cred, after IPO, there isn't much thing. If you have entered discounter, and last but not the least, outlook. Out of all the 8 parameters, this is the only parameter I have given thumbs up to it, because it is of course there in a sunrise sector, at least in their category, which the company claims. So on the lower side of my analysis, I would give Sudeep Pharma 3 out of 8 in this segment as well. But there are a lot of doubts in the investor community, and we will clear all of them. We are now joined by Shanil Bhayani. He's the director at Sudeep Pharma. Very good afternoon to you, Shanil. First of all, IPO recently it was listed, high subscription numbers, but a weak Q2 numbers coming in, and of course the numbers have been on the weaker side. I looked at the margins, I looked at the PAT. What led to this kind of an impact in Q2, Shanil?
Yeah, hi, good morning. Thanks for having me on the show. I think, our business is such that I've always maintained this, that it's best to look at the business on a YTD basis. We operate something in the food pharma space. We operate a campaign order book, which happens on certain quarters for very large customers. We do annual contracts with them, but not necessarily that each quarter there would be a campaign. But throughout the year, there will be multiple campaigns, which is why if you look at the business on a YTD basis, right, you will see the growth that the business has done. I think 26% in terms of revenue, 19% on PAT. Q2, definitely, I think there were 2 reasons. One, certain campaign orders would not have occurred in this Q2 compared to Q2 of FY25. In addition to that, what has changed is, I think the tariffs were announced in August 2025, and that kind of led to a wait and watch scenario for the first month or so in the US, which is our largest market outside of India. What we've seen after that is, I think there was a lot more clarity that came in terms of which products were subject to tariff, which products are not subject to tariff. Today, 50% of our business to the US is now exempted. So while that clarity came in, customers started to place the orders again with Sudeep. I think there was a time differential, so a lot of the invoicing moved to Q3. So while you don't see the numbers reflecting Q2, they will certainly come in Q3. But again, we maintain that as a business, quarterly, there could be significant growth in one quarter, say slightly muted growth in one quarter, but on a YTD basis is the best way to look at our business.
Shanil, the margins fronts, that has been a cause of concern, and a lot of investors have also written to me. They've stated that, of course, before the IPO, the numbers were looking very strong on the margins, and we are asking, will this sustain or not? Now, the margins are almost downtick coming in. I saw your Q2 numbers also. There were some reasons for it. Will these margins or the ROC numbers continue to stay in pressure for Q3, or will there be some bottoming out?
I think if you ask me honestly, I don't think there is any significant margin pressure. When you look at gross margins, they were exceptional last year in FY25. They were significantly higher for a one-time event. Otherwise, 63-64% is our historical average in terms of gross margin, which we are comfortable that this will sustain, and this is what you will see in the rest of the year for FY26. More importantly, on the EBITDA and net margins, what has happened is operationally we continue to remain as strong. However, and I mentioned this yesterday in my quarterly call, that we are making an upfront investment today in building out a larger sales team in the US and Europe, which are two key markets, including warehousing capabilities. Additionally, there is expense that we're currently booking in the business to support the growth in the battery materials ecosystem. So while that is getting expensed out today, that is, I would say in the next couple of quarters, you will see that investment today being, kind of bearing fruit and adding value to the business. Both by going direct to Europe and the US through the direct sales approach, the margin will actually further improve. So while today there is an expense that we're accounting for, it's for the growth and the margin improvement in the coming few quarters.
Shanil, you explained us about that, but the greenfield expansion, that's what before IPO the conversation was, after the IPO conversation was, post earnings also that's the conversation happening. Give us the expected timelines, incremental benefits will start occurring. What will be these dates?
Sure. So as I mentioned, the greenfield is close to completion. We will commission the facility in the next couple of months. So in Q4 of this financial year, there is a total investment of 150 crores that will go into this greenfield, which is now almost complete. And if you look at our historical business, we've operated at a 2.5 to 3 times asset turn. And that is the kind of asset turn that we expect to maintain along with the margin profile for the new greenfield as well. So you will certainly see the benefit coming in FY27, more importantly in FY28.
All right. Shanil, the supplements part, we call it nutraceuticals or allied products. Yeah, I'll ask you two questions. One is the industry aspect of it. What are the key products which are the excipients are there, which is like a literally, you could say, a very big supporting actor to a medicine, to simplify it for our audience. But you position yourself as a pharma company having no exact peer as such. That's what I read in RHP. So how different you are and what's your moat in your business?
I think great question. So I think we were a pharma excipient company when we started in '89. Over the years, we've transitioned from a core pharma company to now becoming a technology-led specialty ingredients. And why I say this is our expertise actually lies in the 6 proprietary technologies which we have developed at Sudeep. And the use of these technology is how can we make the mineral or the ingredient more effective in the human body? So how can we improve the absorption in the human body? How can we make the product more stable? How can we control the release के body में, where it gets absorbed, where it gets released, stability of the product. And these technologies are technologies which very few companies in US and Europe have scaled significantly, but no real competition in, say, other geographies, including India and China. And that is where we see the large opportunity in competing with manufacturers in the West. And that will also kind of drive the margin profile going forward as the specialty ingredients continues to grow. Today, it's close to 40% in terms of revenue contribution. In the next couple of years, we see this becoming almost 50% contribution to the business. And that will further drive the margin improvement in the business.
Yes, Shanil, you have mentioned that. If I'm not mistaken, please correct me. It's like something like in chemical industry, your products are like something like a flavor or a fragrance, having a high margin kind of a usage, and also overall the demand in the entire ecosystem is going up. Also, the new product launches, I want to know a little bit about that. And if you could just give the non-scientific version of it so that our audience understands. You spoke about supplements, and especially if you can give us the lifestyle angle also. What are these key product launches or the categories you are looking at?
So we are from a nutrition perspective, we are focused on six key minerals. So calcium, magnesium, iron, zinc, sodium, potassium. I think when COVID happened, we all recognized the need of having a healthier lifestyle and taking the necessary supplements. You consume during COVID, people were taking zinc supplements, people were taking vitamin C. Historically, people take calcium supplements. So our investment going forward will be how can we help an individual taking calcium supplement, how can we help them absorb better calcium into their bones? Whether it's iron, whether it's zinc, so improving the delivery or the level of absorption in the human body. In the greenfield that we are commissioning, we are expanding capacity of some of our existing products. Additionally, we will be launching certain new molecules again to do with the zinc, calcium, and iron. Again, focusing on how can we make the supplement more effective for the person consuming it. So, what you consume goes down, but your body actually improves the level of absorption that it receives.
All right. Shanil, one more question is there because it's a very new product category and I've slowly started to understand that there is a moat in your business as well. But there are a lot of acquisitions and cross-selling from your arms also are there, right? So there's a key product, then there are ancillary products which keep coming in. Just to give us that entire view, you know, next 3 to 4 years, where do you see Sudeep Pharma, going ahead? How will it look like?
I think there are four. I think today from where we're sitting, there are four areas where we see significant growth opportunities. One is the greenfield and further investing in the minerals category, as I just mentioned. Second is strengthening our specialty ingredients or the technology focused ingredients that we're doing. This has further been strengthened by an acquisition we have done overseas in Ireland. The company has been around for 40 years and they are a key marquee player in the infant nutrition segment. As a business, we want to operate in critical end markets, whether it's infant nutrition, whether it's clinical nutrition. For example, people have started taking a lot of GLP-1 drugs for weight management. When what that does is people start to skip meals, but there is still a requirement of the relevant nutrition that someone needs to consume, right? So that the vitamin and minerals category for clinical nutrition is a key focus area for us. And the third is the battery materials that we're entering into. Again, mineral chemistry is our expertise. The product iron phosphate, we are today the largest in India and have been making it for 10 years. And we're leveraging that expertise to also offer a battery grade iron phosphate, where today we would be the first company globally outside of China to have the technology and the product readily available.
All right. Thank you very much, Shanil, for that. And we're seeing that the management is defending post its Q2 earnings as well. Lot to cover, lot to prove when it comes to Sudeep Pharma as well. And that's all for today. Thank you very much for joining KYC.